Okay, so let's start. We want to start this new topic. And our topic is called impairment of public sector assets. Impairment of public sector assets. This topic is covered under Ipsas number 21 and Ipsas number 26. Okay. What we want to test in this topic, or what we want to discuss in this topic is, listen, how does a public sector entity test for impairment of their assets? Public sector entities, not the normal business, no. For a normal company, we had already discussed in our earlier subtopics, we had already discussed how to test for impairment of assets for a normal business or a company. And before we discuss how to test for impairment of public sector assets, before we discuss this one, let me remind you what we said for a normal business. How do a normal business test for impairment of their assets? We said for impairment of assets, that was covered under what we were calling IS number 36. The International Accounting Standard number 36 was the one for normal businesses. So I want to remind you that, because there are some concepts we shall borrow from there. Now, when we were discussing the topic impairment of assets under IS number 36, we said for a business to know whether their assets have suffered an impairment loss or not, for a business to know whether their assets have suffered an impairment loss or not, you remember we said that company should compare the carrying amount of its assets with what we were calling the recoverable amount. To know whether an asset has suffered an impairment loss or not, we're saying you compare the carrying amount of an asset with its recoverable amount. And we were saying, if the carrying amount of an asset is higher, than its recoverable amount, then we say that asset has suffered an impairment loss. You remember, we were assuming, suppose we assume that the carrying amount of an asset is 1 million. Of course, I do hope you remember, we said carrying amount of an asset is the amount at which an asset appears in the books. The amount at which an asset appears in the books, that is what we call the carrying amount. And so, we want to know whether our asset has suffered. So you compare the carrying amount of that asset with its recoverable amount. And we said, to compute the recoverable amount of an asset, I hope you do remember, we said we normally compare two values. To compute the recoverable amount of an asset, we said you compare two values. One is what we were saying, one of the values is what we call the net realizable value. Then the other amount is what we were calling the value in use. So for that asset you are testing for impairment, you calculate the two values for the same asset. The net realizable value and the value in use. Once you compute these two values for that asset, then we said whichever of the two is higher, that is what becomes the recoverable amount of the asset. For example, if you computed the net realizable value of your asset and you got it as 800,000, and you computed the value in use of that asset and you got 700,000, then we said whichever of the two is higher, that's what you pick to become the recoverable amount, which in our case now, it will be 800. And so if you remember, we were defining recoverable amount of an asset to be the amount that is considered to be the higher of, for one, net realizable value, and number 2, value in use. Whichever of the two is higher, that's what you normally consider to be the recoverable amount. Okay? Then we say, once you compare the carrying amount of the asset with its recoverable amount, if the carrying amount of the asset is higher than its recoverable amount, like in this case, then your asset is said to have suffered. So from this illustration, our asset has suffered an impairment loss of how much? 200. We had our asset originally having a value of 1 million, but the true value for that asset should be 800. And therefore we say that asset should be impaired by an amount of 200. That means you write off 200 from the asset. Of course, you will credit the asset and you will debit the profit or loss with that loss, which we are calling the impairment loss. Another thing, just to remind you, we said, how do you compute what we were calling the net realizable value of an asset? How do we compute the net realizable value of an asset? We said last time that when you're computing, or to compute the net realizable value, you take the selling price of that asset and you minus what we were calling cost to sell. Take the selling price or the fair value, or what you can call the market value of that asset, and you minus any cost to sell. That's how you determine the net realizable value. Then, when we were discussing IS number 36, we said, how do you determine the value in use of an asset? How do you determine the value in use of an asset? Remember, we said, assuming you're testing for impairment of this asset from now, that's when we are testing. To determine the value in use of this asset, we said, you will be required as a company to know what are the projected future cash flows that will be generated from the use of that machine from now onwards. We are trying to test the impairment of this asset now. What are the cash flows that we expect that will be generated in the future from the continuous use of those assets? That means once you project those future cash flows, we say you get the present value. You get the present values of those future cash flows. Once you get the present values of those future cash flows, what you get is what we were calling the value in use. I hope you do remember that. That's what we were calling the value in use. So we were defining value in use to be the present value of the estimated future cash flows that will be generated the continuous use of an asset. The present value of the future cash flows, that's what we call the value in use. So once you compute the net realizable value, compute the value in use of that asset, whichever of the two is higher, you pick it to become the recoverable amount. You pick it to become the recoverable amount. Once you have it now, that recoverable amount, compare that with the carrying amount. Then see if the carrying amount of that asset is higher than its recoverable amount. And if it's higher, then the asset is said to have suffered. Now listen. So I've reminded you what we said concerning impairment of assets under IS number 36. That is what we did in a topic called impairment of assets, IS number 36, for a normal business. Okay, good. But what we want to discuss now is, what about for those sectors that are considered as public sector entities? You know that these are entities that are there to provide a service. Most of the public sector entities are not there to make a profit. They are normally there to provide a service. So if you, as a public sector entity, you have an asset and you want to test whether that asset has suffered an impairment loss or not, what do you do? That's what we want to discuss. For public sector entities, they have two accounting standards that cover the topic of impairment of their assets. We have Ipsas number 21 and Ipsas number 26. Okay. But before we discuss those accounting standards, let me mention one or two things. And this is especially for those who are new to this. If you are new to this class or to this group and you have not subscribed, please subscribe. If you are new to this group and you have not subscribed, there are some students who have just joined. So if you are new to this group and you have not subscribed to my YouTube channel, please subscribe the YouTube channel by clicking that subscription button below there. So even as you're watching the video now, you can still subscribe to my YouTube channel, okay? So that you will be notified whenever I post new videos into the YouTube channel. So if you have not subscribed, please subscribe to my YouTube channel. Just click that subscription button. You can also click the notification bell. Okay? The other thing I want to tell everyone now, this is for everyone now, listen. You may have friends who would wish to join us for this subject and others. So if you have friends who would want to join us for our online classes, tell them that we are offering online classes for advanced financial reporting, which is what we are doing today. We also have financial reporting for the intermediate level, and we also have financial accounting for the foundation level, and the one for ATD level 1 and level 2, and also for CS, the beginners financial accounting. So those are the three papers we are offering on online classes. That is advanced financial reporting, and financial accounting. For advanced financial reporting, we normally have early morning classes or evening classes. Okay? For financial reporting, we only have evening. Okay? Financial reporting. Now, if somebody wants to join any of these, then you can give them my number 0722 6588 0722 658875 for more information. Now, there are some of your friends who may not be able to join a live class either for advanced financial reporting or for financial reporting or financial accounting. What you can tell them is we also have what we call pre-recorded videos. They can also buy what we call pre-recorded videos. Where they get all the videos for the whole syllabus and they can watch them at their own free time. Yeah? That is all I wanted to mention, especially now for everyone, that you can recommend to your friends our online classes, CPA, that is for advanced financial reporting of the intermediate, and financial accounting of the foundation, which is the section 1, which was to be called section 1, and that of the ATD level 1, ATD level 2. Say you can tell your friends who would wish to continue or to join us that our number is 0722 658875. Currently, we are charging 4,200, but we also accept payments on installments. So for more information, somebody can call us on any one of those three subjects. Then we can give him the timetable, the timings. Okay? But that is all I wanted to mention for everyone to recommend our online classes to your friends who are doing these papers. Okay. So with that now, allow me to continue on what we were saying. Now listen to this now. So I hope you have taken that point about how to subscribe. If you have not subscribed, this is for you if you have not subscribed. And for your friends about the online classes. Yeah? Good. Now let me continue. I was saying this. I've reminded you how to test for impairment of assets under IAS number 36. Comparing the carrying amount of an asset with its recoverable amount. How to get the recoverable? Higher of net realizable value and value in use. Okay. Now, for public sector entities, I was saying, listen, for them, they have two accounting standards. They have two accounting standards. One of the accounting standard is Ipsas number 26. And we also have Ipsas number 21. Let me introduce the two. What are they for? Now, if you as a public sector, listen, if you as a public sector entity, you have an asset, which on its own, that asset can generate, listen, can generate cash flows, then you will apply the principles of Ipsas number 26. So number 26 is for cash generating assets. For cash generating assets. You as a public sector entity have an asset which can generate cash flows. Then to test for whether it has suffered an impairment loss or not, use the principles of Ipsas number 21. Otherwise, if you as a public sector entity, you have an asset which you want to test whether it has suffered an impairment loss or not, but that asset cannot generate cash flows, then use the principles of Ipsas number 21. So number 21 is normally for non-cash generating assets. Good. Now, I start with the first one. Ipsas number 26, sorry. I start with Ipsas number 26. How do you test for impairment of public sector assets which can generate, those assets which can generate cash flows? Now listen. For such assets, you as a company, you will be required to apply the same principles that we have reminded ourselves as per IAS number 36. The same principles that we have applied, or we applied when we were discussing IAS number 36. The same principles are the ones you use. Why? Because for IAS number 36, we were testing for impairment of assets that generate cash flows. You there? Good. That's why we were getting the present value. That's why we were getting the present value of the future cash flows. To get what? Get the value in use. So even for public sector assets that can generate cash flows, then we are saying the concepts does not change. Still compare the carrying amount of an asset with its recoverable amount. Okay? Then if the carrying amount is higher than the recoverable amount, then the asset is said to have suffered. Get the recoverable, just compare the net realizable value with the value in use. Are you there? Good. So that's all I can say concerning Ipsas number 6. That it is the same concepts that are applied like those used in IAS number 6. I've reminded you concepts of IAS number 36. Most critical one is Ipsas number 21, which is what I want to talk about now. Okay? So allow me now to introduce the concepts under Ipsas number 21. They are slightly different, though we are going to borrow some of the concepts. Now listen. For public sector entities whose assets cannot generate cash flows, to test whether their assets have suffered an impairment loss or not, listen, you will still compute what we call the carrying amount of that asset, and you will compare that with what we are calling, or what we shall be calling, listen, what we shall be calling recoverable service amount. This time you don't just call it recoverable amount, you call it recoverable service amount. Remember, these are assets that cannot generate cash flows. So which automatically means you as a public sector entity, you're only using these assets to provide a service, So you compute what we call recoverable. This is what we are calling recoverable service amount. Recoverable service amount. Good. Still, listen. Still, to know whether the asset has suffered, you compare those two, and if the carrying amount of the asset again is higher than its recoverable service amount, then the asset is said to have suffered. Yeah? Good. The other question or the other point is, how do we compare the recoverable service amount? To compute the recoverable service amount, again, for that particular asset, you compute two values. One, again, is the net realizable value, and number two is what we call value in use of that asset. Same, whichever of the two is higher, that's what becomes the recoverable service amount. Now listen, to get the net realizable value, the concept does not change. You will still take the selling price of that asset or the market value of that asset, and you minus any cost to sell. The only issue now, listen, the only issue now is here. How do you determine the value in use for a non-cash generating assets? When I was discussing IS number 36, I said, to get the value in use, I said you get the present value of all the future cash flows. But here now, we have an asset which cannot generate its own cash flows. We have an asset which cannot generate cash flows. But we are still saying, compute the value in use. So how do we get the value in use? Under Ipsas number 21. That's what I want to talk about now. Listen, according to this accounting standard, there are three methods of computing. What we are calling the value in use. There are three methods of computing value in use. One method is what we shall be calling depreciated replacement cost. Depreciated replacement cost method. That's one method of computing the value in use. The second method is what we call restoration cost method. Restoration cost method. That's another method of computing the value in use of an asset. 3 is what we call service unit approach. Service unit approach. These are the three methods of computing the value in use. The question will always tell you which method to use. The question will always tell you which method you should use. Compute the value use. Okay? Let me go through each of them on how to use them to compute what we are calling the value in use. So that once you get the value in use, you compare it with the net realizable value, then whichever of the two is higher, that will become the recoverable service amount. That will become the recoverable service amount. Okay? Good. The first one is what we are calling depreciated replacement cost. To illustrate this one, let me use an illustration. To illustrate how that method works, let me use an illustration. I want to assume that you as a public sector entity, you bought a machine at a cost of 20 million. That machine has a useful life of 10 years. 5 years after you have used that machine, 5 years after you have used that machine, something happened. And as an entity, you want to determine whether it has suffered. So it's obvious you first calculate what we are calling the carrying amount. Said, you compare the carrying amount with the net or with the recoverable service amount. So you bought that machine at a cost of 20 million, it had a useful life of 10 years. 5 years later, something happened, and you feel as a company or as an entity, sorry, test for impairment of the asset. So first, what is the carrying amount? Of course, you will take the cost, which is 20 million. You less the accumulated depreciation, obvious, just like a normal asset. The cost being 20 million, we divide that by the useful life. That will give me the depreciation charge per annum. That is 20 divided by 10. That's about 2 million per annum. 5 years, I've already been depreciating it. So for those 5 years, what becomes the accumulated depreciation? 20 divided by 10, that's 2. 2 times 5, that's 10 million. So by the time I'm testing for impairment, my asset has a carrying amount of another 10 million. That's the carrying amount. So we want to compute now what is the value in use. Listen, if you are using the restoration cost method, no, depreciated replacement cost method, then listen, the first thing you have to find out is what is the replacement cost of this asset. If we are to replace that machine now, what would be the replacement cost? Suppose the question tells you that the replacement cost of this machine is the replacement cost of this machine is 15 million. If you are to replace that machine now, you will replace it at a cost of 15 million. Once you know the replacement cost, listen, you minus the accumulated depreciation based on the replacement cost. So the machine will still have a useful life of 10 years. We used the machine for 5 years. So now you compute what we are calling the depreciated replacement cost. Take the replacement cost, you minus the accumulated depreciation of that asset based on the replacement cost. Meaning you come and say a less accumulated depreciation again. Take the cost, which is now 15 million. The asset had a useful life of 10 years. Then you multiply that by the number of years you used the other machine. Okay? Which is how many years? 5 years. So if this was our asset, what would have been the accumulated depreciation? Take 15 million is the replacement cost. Divide by the useful life of 10 years. That gives me 1.5. Multiply by 5. That looks like exactly half of the 15, which is about 7.5. Good. Once you get that, now you remain with a balance of 7.5 million. That balance of 7.5 million, listen, is what we are calling depreciated replacement cost. Is what we are calling depreciated replacement cost. Once you have it now, listen, once you have it, now you know the value in use on the basis of the replacement cost, which is how much? 7.5. Don't forget, our machine had a carrying amount of how much? 10 million. The one we are testing costed us 20. We had used it for 5 years. Those 5 years, it had lost depreciation of how much? 10. Then we had seen the carrying amount was a balance of 10. Now we want to compute the recoverable service amount. I've already computed the value in use using the method we are calling depreciated replacement cost. Okay? Then, listen, for most questions, you will be told, or you may be told, that for this asset we are testing for impairment, we can't get a buyer. We can't get a buyer. This is an asset that is being used for provider service by the public sector entity. Therefore, in most cases, you may not likely find a buyer to buy, meaning it could have a net realizable value of 0 because you can't get a buyer. Yeah. Now, assuming that is 0, now you know the value in use of 7.5. Whichever of the two is higher, pick it to become the recoverable service amount, which in our case is 7.5. Then you ask yourself, has it suffered? Carrying amount of 10 million, it has a recoverable service amount of 7.5 million. Has it suffered? The answer is yes. How much? 2.5. So I'm through now with the first method of computing the value in use for a non-cash generating asset. For a non-cash generating asset. Can use what we are depreciated replacement cost method. Good. Let me discuss the second one now, which is what we are calling the restoration cost method. The restoration cost method. Now, this method is used, restoration. This method is used mostly when an asset that you want to test for impairment been damaged. Maybe it's a motor vehicle or a building that was damaged. And you need to know what would be the cost of restoring it to a usable condition. Maybe it's a motor vehicle that has been damaged. What would restoration cost? So if you are using this method, we normally use it, those assets that have been damaged. But how do we use it? Compute the value in use. That's what I want to talk about again. So I want to use the same illustration. Whereby I'm assuming the cost of the asset is still 20 million. That the useful life of 10 years. 5 years later, something happened and you want to test whether it has suffered an impairment loss. What did you do? You first computed the carrying amount, which is still how much? 10 million. Took the cost to minus the accumulated depreciation. Then now you want to determine the value in use using the restoration cost method. Now listen, again, you will be required to know, as at the time you are testing for impairment, listen, what would be the replacement cost? What would be the replacement cost of that machine, of that motor vehicle? To identify again the restoration at the replacement cost. The replacement cost. Once you are given the replacement cost, let me assume for now again 15 million. Listen, you compute what we are calling the depreciated replacement cost of the asset. The depreciated replacement cost of the asset, which again still remain 7.5. It will still remain 7.5. Take the replacement cost 15 million, divide by the useful life of 10 years, multiply by the number of years you have used the asset, which is 5 years. Once you get that, now listen to this now. Once you get the depreciated replacement cost, this time, don't stop there. This time, don't stop there. No. You will have to ask yourself, we are using the restoration cost method. You will have to find out, to restore the vehicle that was destroyed or had been damaged, to restore it to a usable condition, what would be the restoration cost? To restore the other asset that was damaged to a useful condition, or a condition that you can still use it, what would be the restoration cost? That which you are given as the restoration cost, you less from the depreciated replacement cost. So here we shall be subtracting what we are calling the restoration cost. Let me assume that the question tells you to restore the vehicle to a useful condition, it will cost you a restoration cost of maybe 500,000. So if it will cost you another 500,000 to restore the asset to a useful condition, then you minus that restoration cost. From where? From the depreciated replacement cost. That will now give me a balance of how much? 7 million. That 7 million now becomes the value in use becomes the value in use as per the second method, which we are calling the restoration cost method. Once you now know the value in use, which in our case here we are assuming to be 7 million, compare that again with the net realizable value, which I'm saying in most cases it will be 0. Get the whichever of the two is higher, which in our case now we are assuming again 7 million. That becomes the recoverable service amount. Compare that with the carrying amount. And if the carrying amount is higher than the recoverable service amount, we say that asset has suffered. This illustration, obvious it has suffered. This illustration suffered because the carrying amount is 10 million, while the recoverable service amount is 7 million. So it has suffered a loss of how much? 3 million. Good. So I'm through with the second method of computing what we are calling the value in use. We go to the third one, and that's what we are calling the service unit approach. Again, use this method. Let me assume the same figures. Cost of the machine was 10 million, not 20, sorry. Useful life was 10 years. 5 years later, something happened, and you want to test whether it has suffered impairment loss. What do you do first? You computed carrying amount, 10 million. Good. That was the carrying amount, 10 million. Then listen to this again. For that third method also, by the time you are testing for impairment, you will ask yourself, what is the replacement cost of that asset? What is the replacement cost of that asset? Once you get the replacement cost, listen, you again calculate what we are calling the depreciated replacement cost. You still calculate what we call the depreciated replacement cost. Once you get the depreciated replacement cost, like in this illustration, we are getting 7.5 million. Listen, now you don't stop there again. Listen, from that value, remember, we are using service unit approach. The question might tell you, as at the time you are testing for impairment of this asset, listen, this asset had lost 20% of its efficiency. It had lost 20% of efficiency, or 10% or 15%, whatever the question will tell you. The capacity or the production capacity of this machine had lost 20%. So if you are told that the asset had lost its efficiency by 20%, then listen, from the replacement, from the depreciated replacement cost, you minus the reduction. You minus the reduction in the usage or the efficiency of the asset. Reduction in the production efficiency. And even put it this way, reduction in the production efficiency of the asset, whatever it is. If you are told, listen, it has lost 20% of its efficiency, then you take 20% of the depreciated replacement cost. It will be 20% of 7.5 million. That would become the reduction in the efficiency of the asset. Let me calculate what is 20% of 7.5. 20% of 7.5 is how much? It's about 1.5. I minus 1.5. That is the reduction in the efficiency. Then I now get a balance of 6 million. That 6 million now becomes again the value in use. Yeah? Good. So that is the third method where we are calling it service unit approach. Now listen. Alternatively, to get the same 6 million, you could say this. Listen. If it has a depreciated replacement cost of 7.5 million and the machine has lost 20% of its efficiency, it means we are left with 80% efficiency of this asset. So it is the same as just taking the remaining service potential. Once you get the depreciated replacement cost, to get the value in use, you can take the proportion of the remaining service potential, 80% remaining efficiency, because it has lost 20%. So if you take 80% of 7.5, you still remain 6 million. That's what I want to confirm as another way of computing the value in use. Instead of subtracting the reduction in the efficiency, you can take the proportion of the remaining service potential. Yeah? Which again I can see is 6 million. That's how we compute value in use using this third method, which we are calling service unit approach. Now listen, one thing I hope you have noticed is this. Of the three methods, all the three methods, the first thing you must do is to compute what we are calling the depreciated replacement cost. I hope you have noticed that. Three methods first have to calculate the depreciated replacement cost. Once you get it, then it's from there that you ask yourself, which method am I required to use to compute the value in use? If you are using the depreciated replacement cost, whatever you have got it becomes the value in use. Okay? If the question tells you you are using the restoration cost, then I told you, once you get the depreciated replacement cost, you minus from the depreciated replacement cost, I told you minus the restoration condition. What will be the restoration cost? Minus. Then you get the value in use. Method 3, service unit approach. Again, once you get the depreciated replacement cost, say you minus the proportion of the reduction in the efficiency, the proportion of the reduction efficiency of the machine. In other words, I've told you, take the proportion of the remaining service potential. Take the proportion of the remaining service potential on the replacement cost, on the depreciated replacement. Good. Those are the three methods of computing the value in use. These public sector assets that cannot generate own cash flows, that they cannot generate cash flows. Good. So I think we can put down summary notes now. We can now put down the summary notes, or we do a question from your past papers. Before we do a question from your past papers, let's put down summary notes, what we have already said. So the topic is impairment. You can even start with Ipsas number 21 and 26 and put there Ipsas number 21 and 6. Then the subtopic, the topic is impairment of public sector assets. Impairment of public sector assets. Impairment of public sector assets. Then you see this. Then you see this. For public sector assets, there are two accounting standards. Public sector assets, there are two accounting standards. Two accounting standards. One, Ipsas number 26. Ipsas number 26. Then you put a dash. Ipsas number 26, then you put a dash. Say this. or cash generating assets. Cash generating assets. Or cash generating assets. Then below that you can say, for such assets, we apply the same principles. We apply such assets, we apply the same principles. We apply the same principles as described. We apply the same principles as described in IS number 36. We apply the same principles as described in IS number 36, in bracket, impairment of assets. That was the accounting standard name. I have said you apply the same principles as described in IS number 36, bracket, impairment of assets. So that one we don't have to put down the notes. When we were discussing the topic of impairment of assets, that we discussed in details. Just to remind you that it is something we did earlier. IS number 36 we did earlier as a topic on its own. So you can even go and remind yourself there. But I've reminded you the general points concerning that so that we apply those points in our public sector. That's number one. Number two, Ipsas number 21. Ipsas number 21. Ipsas number 21. Then you put a dash for non-cash generating assets. For non-cash generating assets. For non-cash generating assets. For non-cash generating assets. Non-cash generating assets. For non-cash generating assets. Then you say this. Under that, and say this. To test whether an asset has suffered. Test whether an asset has suffered any impairment loss. Test whether an asset has suffered an impairment loss. We compare the carrying amount of the asset. Compare carrying amount of the asset with its recoverable service amount. Compare the carrying amount of the asset with its recoverable service amount. Its recoverable service amount. Another paragraph. Recoverable service amount. Coverable service amount is the amount that is considered to be coverable service amount, the amount that is considered to be the higher of. The amount that is considered to be the higher of, number one, amount that is considered to be the higher of, number one, net realizable value. One, net realizable value. Number two, value in use. See, coverable service amount is the amount that is considered to be the higher of. One, net realizable value. Two, value in use. Before I put down the next sentence, listen to this now. Before I put down the next sentence, listen to this now. Listen to this now. When we were dealing with IS number 36, I said, to get the value in use, what do you do? When we were discussing IS number 36, I said, get the value in use, you get the present value here. We're saying you get the present value of the future cash flows. But now, under Ipsas number 21, we don't have cash flows. So how can you define? Because under IS number 36, listen, when you are defining value in use under IS number 36, we normally say it is the present value of the estimated future cash flows. That is under IS 36 or under Ipsas number 26, because they are generating cash flows. So to get the value in use is the present value of the future cash flows. But how then can you define, listen, how then can you define value in use on non-cash generating assets? Yet there is no cash flows. Listen, for Ipsas number 21, for non-cash generating assets, we normally say value in use of an asset, listen, it is considered to be the present value of the remaining service potential. Don't forget, we said these are assets that are used to provide service. So to get the value in use of a non-cash generating asset, we can say it is the present value of the remaining service potential. So some questions I've asked you. Listen, some questions from your past papers have asked you to define value in use as per. They quote the standard. They tell you as per Ipsas number 26, cash generating assets. Then you don't say remaining service life, service potential, no. Say the present value of the estimated future cash flows. If they tell you, define the value in use as per Ipsas number 21 for non-cash generating assets, then you say it is present value of the remaining service potential. Good. Let's put down that definition. Pick another paragraph. Value in use is the present value. Value in use is the present value. Don't forget, we are still discussing under Ipsas number 21. Saying value in use is the present value of the remaining service potential. Value in use is the present value of the remaining service potential. Another paragraph. An asset is said to have suffered an impairment loss. An asset is said to have suffered an impairment loss if asset is said to have suffered an impairment loss if the carrying amount of the asset is higher. If the carrying amount of the asset is higher than its recoverable service amount. Asset is said to have suffered an impairment loss if carrying amount of the asset is higher than its recoverable service amount. Remember, we are still under Ipsas number 21. Good. Then you can say this. Other paragraph. The following are the methods of determining the value in use. Following are the methods of determining the value in use. Following are the methods of determining the value in use for non-cash generating assets. For non-cash generating assets. Following are the methods of determining the value in use for non-cash generating assets. Number 1, 1. Depreciated replacement cost. 1. Depreciated replacement cost. Depreciated replacement cost. Number 2. 2. Restoration cost method. Restoration cost method. 2. Restoration cost method. Restoration cost method. 3. Service unit approach. 3. Service unit approach. Service unit approach. Then below there, now you can put, now let us get the computation and the couple depreciated replacement cost. Depreciated replacement cost. Let's compute the value in use for that one. You take it like, that's the first method. You come and say your value in use equals to replacement cost. Value in use is equals to replacement cost minus accumulated depreciation based on the replacement cost. Based on the replacement cost. See, to get the value in use using this method, take the replacement cost minus accumulated depreciation based on the replacement cost. Okay? Good. Finish. Go to the second one, which we are calling restoration cost method. Restoration cost method. Restoration cost method. Before we put down how to use it and the KIV, restoration cost method, put down this. This method is used. This method is used where impairment loss. This method is used where the impairment loss arises, where the impairment loss arises from damage of the asset. This method is used where the impairment loss arises from damage of the asset. Arises from damage of the asset. Then below that, you can again say your value in use equals to depreciated replacement cost. Depreciated replacement cost. Depreciated replacement cost minus restoration cost. Minus restoration cost. Get the depreciated replacement cost minus the restoration cost. Good. That's method 2. And now go to the last one, service unit approach. Service unit approach. Service unit approach. How do you use it to get the value in use? We have already discussed it. Maybe value in use in equals to value in use equals to depreciated replacement cost. Depreciated replacement cost minus depreciated replacement cost minus proportion of reduction in the use of the asset. Proportion in the reduction of the use of the asset. What proportion of the use of that asset has it lost? Minus the proportion of reduction in the use, which I told you is the same as just taking the replacement cost, take a proportion of the remaining service pension. You can even say there alternatively, value in use equals to depreciated replacement cost times proportion of the remaining. Value in use equals to depreciated replacement cost times proportion of the remaining service potential. The remaining service potential. Good. So with that idea now, I want us to do 1 or 2 past paper questions from your past papers. Then you can do others now as for your own practice. There are many from your past papers, but I want us to do 1 or 2. Then from there you can now do on your own. Topic is not hard. Normally a topic where you can get good marks. Yeah? Finish. I want to project a question. That I want us to do. Also shared it in the group. Already in your group. But let me project it. Okay, I hope you're through with the copying. I want to project the question. Okay. Okay, there it is. That's the question I want us to do. It's a question that came in June 2012. I am concerned with question A and B. C and D does not affect the topic, but it is A and B that I'm concerned with for now. But A is a theory part. Let me read it. Number A says, it was question 5 of that June 2012. It says, with reference to Ipsas number 21, impairment for non-cash generating assets, explain the following terms. 1. Government business enterprise. 2. Carrying amount. 3. Recoverable service amount. I want to believe that nobody should have any problem with any of those 3 terms. The only term we may not have mentioned is the first one, but still, listen, with your accounting knowledge, I believe you should be able to say what is a government business enterprise. Okay? Now, it's obvious. Listen, when you see the word government, when you see the word enterprise, when you see the word business, one should be able to tell something. That obvious, this is an enterprise which is owned by the government. Listen. And when you see the word business there, listen, You all know the aim of a business is to make profit. You know that. So one could have said, or one should say, that a government business enterprise is an enterprise that is owned by the government with an aim of making profit. You know there are some parastatals which have enterprises that are run like a normal business. Those are the entities we are calling a government business enterprise. It's an entity or an enterprise that is owned by the government with an aim of making profit. That's where the word business comes in. What's carrying amount? Because we have said carrying amount is the amount at which an asset appears in the books. That one you all know. The amount at which an asset appears in the books, that's what we call carrying amount. Number 3, what is recoverable service amount? I told you, this is the amount that is considered to be the higher of 1, net realizable value of the asset, 2, value in use. Good. Those 3 items I think had 2 marks, 2 marks, 2 marks. You can see one could get 6 marks for nothing, just to mention what these terms are. My concern for now is part B of the question. Which says, on 1st January 2006, Matopeni Primary School acquired a bus at a cost of 6 million to enable students from a nearby village to commute to school free of charge. The school estimated that the bus had a useful life of 10 years. On 31st of December 2010, the bus sustained damage in a road accident, requiring shillings 1.2 million to be restored to a useful or usable condition. The restoration did not affect the useful life of the asset. The cost of a new bus to deliver similar service was 7.5 as at 31st of December 2010 required. Evaluate the impairment loss attributable to the bus using the requirements of Ipsas number 21, impairment of non-cash generating assets. Then the question says, use the restoration cost method. Given 6 marks. First thing, you listen. We acquired this bus on 1st January 2006 at a cost of how much? 6 million. It had a useful life of how many years? 10 years. Come 2010, December, something happened. That's the time we want to test whether it has suffered. We are testing impairment after how many years? From January 2006 to 2010 December. Those are how many years? 2006, 2007, 2008, 2009, and 10. Those are 5 years. Good. So with that now, let's compute first the carrying amount of the asset now. Let's first compute the carrying amount of the asset. Good. So we are doing a question of June 2012. It was question 5B. Let's first calculate what we are calling the carrying amount. Andika determination of the carrying amount. Determination of the carrying amount. Let's take the cost. We are told the cost was 6 million. We less obvious accumulated depreciation. That machine or that bus costed 6 million. It had a useful life of 10 years. We are testing in 2010 after 5 years. We multiply that by 5 years. So cumulatively, what is the accumulated depreciation? Looks like a half, 6, not 10, and 5 years. That's a half. Half of 6 million, that's exactly 3 million. So we have the carrying amount remaining, another 6 million, 3 million, sorry. That is carrying amount. Good. Now we know the carrying amount. Now we want to compute the value in use of that asset using a method we have been told called restoration cost method. Good. Andika below that, determination of value in use, determination of value in use using restoration cost method. Determination of the value in use using restoration cost method. Okay? Now let us get the replacement cost. Hope you remember. Come and see a replacement cost. Go back to the question and find out. To replace a similar bus, what would it cost? To replace a similar bus, what would it cost? Let me go back to the question. Okay, the last sentence, or they are saying, and the last sentence they are saying, the cost of a new bus to deliver similar service was 7.5 as of 31st December 2010. Good. That is the replacement cost. That is 7.5. Then we less the accumulated depreciation based on the replacement cost. Come and see a less accumulated depreciation. That will be 7.5 M divided by 10 years, multiplied by 5 years. Take 7.5 divided by the useful life of 10 years, multiply that by 5 years. So it looks like again half. 5 over 10, that's a half. What's a half of 7.5? It's 3,750,000. 3,750,000. Which leaves me now with what we are calling, listen, depreciated replacement cost. Depreciated replacement cost. That is another 3,750,000. Want you to listen carefully. Want you to listen. If we were to use this method, which is the depreciated replacement cost, as a method of determining the value in use. Obvious. Remember, there is nowhere we are told. Listen, there is nowhere we are told how much the bus can be sold for. Meaning, there is no net realizable value. So if we were using the depreciated replacement cost, then the recoverable service amount would be 3.75. Then if that is the value in use, and I compare with the net realizable value of 0, the recoverable service amount would be 37.50. If I'm using depreciated replacement, then now I ask myself, would it have suffered, assuming we were using the depreciated replacement cost? Would it have suffered? The answer is yes or no. The answer is yes or no. Maybe somebody can chat, not even ask you a question today. I have said, if we were using the depreciated replacement cost, having computed the depreciated replacement cost as 37.50, having concluded that the asset did not have a net realizable value, leaving us to pick that replacement cost, depreciated replacement cost, as the value in use, which of course, no, become the recoverable service amount. then I want to know, has it suffered? So I was asking you, chat, tell me yes or no. Waiting, not asked you a question today. Has it suffered? If we were using the depreciated replacement cost, would you say that this asset has suffered? Yes or no? I want to see the word yes or no. Chat and tell me yes or no. I'm expecting somebody to comment the live chat. Has it suffered? Which means, listen, you are comparing. You are comparing what? You are comparing the carrying amount of the asset, which is how much? Our carrying amount is 3 million. We want to compare it with the recoverable service amount, which we are concluding is 37 what? 37.50. So has it suffered? The answer is automatically no. Why? Because the condition for an asset to suffer is that the carrying amount should be higher than the recoverable service amount. Listen, so if we were using the depreciated replacement cost method, then this asset would not have suffered. But we are not using the depreciated replacement cost method. We are using which method? We are using the restoration cost method. So from here, now you come and deduct you less restoration cost. You less the restoration cost. Let's go and check how much is the restoration cost. Wamesema to restore the bus a usable condition, what is the restoration cost? Let's go back to the question. They said, I think it's third line in part B of the question. Third line says, the bus sustained damage in a road accident requiring 1.2 million to be restored to a useful or usable condition. Good. So the restoration cost is 1.2. Let's deduct that 1.2. That will leave me with what we are now calling value in use to be how much? This is value in use now. I take that 37.50 minus 1.2. I'm remaining with a value of 25.50. 25.50. Yeah? Then you can say there below that, put down this below that. You can say something like this. Since the asset does not have a net realizable value, since the asset does not have a net realizable value, then the value in use, of shillings 2,550,000, then the value in use 2,550,000 becomes the recoverable service amount, of the asset. Comes the recoverable service amount of the asset. Okay? Now we can conclude whether it has suffered, and take another paragraph. Comparing the carrying amount of the asset. shillings 3 million. Remember that was the amount. Let me confirm. Comparing the carrying amount of the asset, yes, 3 million with its recoverable service amount. Its recoverable service amount. Its recoverable service amount, shillings 2,550,000. 2,550,000. Then the asset has suffered. Asset has suffered an impairment loss. Asset has suffered an impairment loss of the following amount. Asset has suffered an impairment loss of the following amount. Good. Let's compute the impairment loss. Come and see your impairment loss equals to 3 million minus 2550. That looks like exactly 450. That's our impairment loss for that asset. So I'm through that question now. Through with that question now. So finish. We do one more. Finish. We do one more. Finish. We want to do one more question. You can see for that part B, you could get 6 marks easily. Okay. Let me project another one. Let me project another one that I want us to do. Let me project another one that I want us to do now. Let me project another one that I want us to do now. The second one is a question that came The second one, I've projected a second question now. That's a question that came in June 2013. June 2013. That's the question I want us to do now. June 2013, that's when it came. So let me read it. It was question 5B again. Question 5. It says, with reference to, I'm reading, with reference to Ipsas number 26, impairment of cash generating assets. Mark you, impairment of cash generating assets. Explain the following terms. 1. Value in use. 2. Recoverable amount. You are given 2 marks for each, but don't forget, this time we are defining as per Ipsas number 26 for what? For cash generating assets. We are told what is the value in use. Remember, this time the assets can generate cash flows. So what is the value in use when you are told to define? Because we said it is the present value of the estimated future cash flows. That's all. The present value of the estimated future cash flows. Because these assets now can generate cash flow. But 2, they have asked you what is recoverable amount. This again said it's the amount that is considered to be the higher of 1, net realizable value, 2, value in use. Question. Good. That's all. Now we do part B of the question. Now we do part B of the question now. Let's read part B of the question now. Part B says, you are there, I want to read it. Part B says, on 1st January 2008, on 1st January 2008, that's what the question says, Mashambani County Education Department purchased a printing machine at a cost of 40 million. The department estimated that the useful life of the machine would be 10 years. On 31st December 2012, it was reported that an automated feature on the machine's function did not operate as expected, resulting in a 25% reduction, in the machine's annual output over the remaining 5 years of its useful life. The cost of a new printing machine was shillings 45 million as at 31st December 2012. Required. Compute the impairment loss as at 31st December 2012 using the service units approach. Here is a machine costed as 40 million when on 1st January 2008, you can see there, that time that the useful life of how many years? Second line, 10 years. What happened? On 31st December 2012, the printing machine had its feature going or not doing as expected, and therefore it resulted in a 25% reduction in the machine's annual output over the remaining 5 years. The cost of a new printing machine is 45 million. Good. Let's do that one now. The June 2013, the concepts are the same. We are doing June 2013, question 5B. June 2013, question 5B. Let's calculate. Okay. So first, again, you hope you remember, we said you get what we are calling the carrying amount. So let's determine, andika somewhere, determination of the carrying amount. Termination of the carrying amount. Termination of the carrying amount. We take the cost of the machine. We were told originally it costed, I think, 40 million. Let me confirm. Yes. We less accumulated depreciation. Take that 40 million, divide by the useful life of 10 years. We are told it suffered an impairment after 5 years. What becomes the accumulated? Again, it looks like exactly half. That becomes 20 million. We remain with a carrying amount of another 20 million. That is carrying amount. Good. Now we know the carrying amount. We now want to compute what? The value in use. Using which method? The service unit approach. Let's do it. Andika somewhere determination of value in use using service units approach. determination of value in use using service units approach. I do hope you remember either method. Said the first thing you must do what? Compute what we call what? Depreciated replacement cost. The first thing you must do, compute the depreciated. First, let's get the replacement cost. What was the replacement cost of that machine? We were told the replacement cost, I can see down there, last sentence in part B, the replacement cost was 45 million. The last part of the part B, good, that is 45 million. We less accumulated depreciation again based on the replacement cost, which will be 45M divided by 10 years times 5 years, which is again exactly half. Half of 45 looks like exactly 22,500. That leaves me with what we are calling depreciated replacement cost. Depreciated replacement cost of another how much? 22,500. Are you there? Hope so. After that, said you do what? You now ask yourself, which method are we using? Once you compute the depreciated replacement cost, ask yourself from the question, which method are we using? Are we using the depreciated replacement cost? If yes, check. Has it suffered? No. Carrying amount is 20. Value in use would have been 22,500, and it has not suffered. But we are not using the depreciated. We are using the service unit approach. I said you less proportion of reduction. Portion of reduction in the use of assets. The asset. We are told it lost 25% of its production capacity. I think so. Let me confirm. Yes. Third line, second last line in note B says, resulting in a 25% reduction in the machine's annual output. It has lost 25% of its efficiency. We take 25% of 22.5 M. What does it come to? What does it come to? So we reduce the production, and we reduce the efficiency by the proportion of the reduction. 25% of 22.5, that looks like 5,625,000. Then I remain with a balance of how much? Looks like 16,875,000. That's what we are calling value in use. Value in use. Okay. Then we said alternatively, or for exam purposes, you don't have to tell the examiner. Our depreciated replacement cost was 22,500. It lost 25%, so the remaining service potential is 75%. Let's see whether it will give me the same. If I take that, 75% of 22,500, that comes to 16,875. 16,875. Same amount. Now we can conclude. Now we need to conclude. Now we need to conclude. Then you can say this. Other paragraph if you're through. Other paragraph if you're through. Say this. Since the machine has no net realizable value. Since the machine has no net realizable value. Since the machine has no net realizable value, then the value in use, shilling 16,875,000, therefore the value in use of shilling 16,875,000 becomes the recoverable service amount. Comes the recoverable service amount of the machine. Therefore, value in use shilling 16,875,000 becomes the recoverable amount of the recoverable service amount, becomes the recoverable service amount of the machine. Remember, this one is not generating cash flow, so we call it recoverable service amount. See, since the asset no net realizable value, then I've said, then its value in use, shilling 16,875,000, becomes the recoverable service amount of the machine. Good. Now we can conclude whether it has suffered. Obvious, it looks like it has suffered because the carrying amount was 20, I think so. Yes. Now you can say this, the paragraph. Say this, the paragraph. Say this, comparing the carrying amount of the machine. Comparing the carrying amount of the machine, shillings 20 million. Comparing the carrying amount of the machine, shillings 20 million, with its recoverable service amount. With its recoverable service amount, shillings 16,875,000, 10,875,000, comma, the machine has suffered. Machine has suffered an impairment loss. Machine has suffered an impairment loss of the following amount. Machine has suffered an impairment loss of the following amount. Good. So below that, andika impairment loss equals to 20 million minus 16,875. 16,875. What do we get? Looks like 3,125,000. 3,125,000. That therefore brings me to the end of that question. That brings me to the end of that question now. Okay, now listen. There are many other questions from your past papers which you can now attempt. Now listen, one of them that you can attempt on your own is November 2019. Listen, I think that was question 3. November 2019, I think it was question 3. Listen, that question has 2 parts. Part A is still a computation using one method. Part B is another asset, different asset, using a different method. This question of November 2019 is okay because it tests you using 2 different methods. two different assets. Questions we have done, one question was testing using one method, another sitting, another method. But this November 2019 has two methods on the same question, but two different assets. But the concept doesn't change. Yeah? Maybe for now we can stop there. Now. Pick it up from there next time. Now listen. Just to remind you, those who are there and have said they have not subscribed, please subscribe to the YouTube channel. If you're there and you have not subscribed, please subscribe to the YouTube channel so that you can get notification whenever we post new videos into the YouTube. Please subscribe. Said as you're watching this, still watch, click that subscription button, click the notification bell. The other thing I told you is that if you have friends who are doing advanced financial reporting of the advanced level, or they're doing financial reporting of the intermediate level, or financial accounting of foundation level, or ATD 1 and 2, you can recommend to them our online classes. Tell them we are running online classes for those three subjects. Say, for advanced financial reporting, we have either early morning, which normally starts from 5:30 in the morning, and we have evening classes, which starts from 8 p.m. Then we have financial reporting, normally that's evening. Then we have financial accounting. I have said these are the three courses. If one of your friends would want to join us, can call me on 0722 65 8875. Listen also, I forgot to say this. If they join now, they can still get the videos of the classes that they have missed. Whenever you miss a class, don't panic. You can still get the video of the class that you missed. Whenever you miss a class, still get the videos of the class that you missed. Okay? Next, I've told you, tell them that if they cannot join a live class, then they can buy what we are calling pre-recorded what? Pre-recorded videos, the whole syllabus. They watch them at their own free time. That's what I told you. And I said, we are charging 4,200 as at now, and it is accepted. One can pay on installments. Good. That's my number, 0722 65 8875. If you want to recommend to your friends about our online classes. Okay. Otherwise, see you next time. Hoping, I think now we shall start a different topic, because I've covered this one of impairment of public sector assets. I've covered it. Good. See you next time. Bye for now. Please remember to subscribe. If you are watching and you have not subscribed, please subscribe. By the way, you can also like the video. Everyone now, click that like button. It's okay. You can click the like button for the video. If you like the video, or if you like the class for today, click that like button. Click that like button if you like the class for today. Otherwise, I hope you have understood what we have discussed today. See you next time when we shall start a different topic now. Bye for now. See you then.